Let's talk a little bit more about that conference that's coming up in Las Vegas next week, CES. What are you expecting to hear from a lot of the major players?
Hey, Happy New Year. It's great to be here. Look, I agree with Ed. I think it's something that a lot of also retail investors kind of look to because things like CES are one of these market events where the sort of there's a level playing field. Everybody gets the information roughly at the same time. You can kind of think about it over the weekend. And so I very much agree with Ed's take on that.
Is Nvidia going to be the star of the show here?
I think so. I would expect so. It was the star of the show last year amongst retail investors as well. I think on our platform, Nvidia trading was up over 100% year over year. And in 2024, it was also the #1 most traded stock, and that continued through 2025. And I kind of would be surprised if we didn't see that continue into 2026.
You know, we're seeing Bitcoin back above 90,000 today, and apparently the next move could be massive one way or the other because it's been trading in such a narrow range for so long. You know, what's a good valuation for Bitcoin right now, do you think, Jannick?
That's a good question. I mean, there's not really a lot of fundamentals to value this on, as you know. But I think what was interesting in 2025 is that it was actually the first year since the Bitcoin ETFs, which remember many refer to as the IPO moment for Bitcoin. And so this is the first year since then that actually Bitcoin went down. And I think we saw a ton of demand for Bitcoin. I mean, I think October and November were among the biggest Bitcoin inflow months we've ever had on the platform. And so I think even though it's come off its highs, I think there's still a lot of demand. There's still a lot of people that are underwriting this now based on the political momentum, everything that's sort of happening in the industry within crypto. And then the question is there sort of a leading lagging indicator between all the developments in the industry? You're seeing now crypto go onto API rails. We just acquired a company called Alto Crypto IRA that lets you actually hold Bitcoin and other crypto assets in your IRA account. And so in so many ways, this asset class is maturing. And I think a lot of people are underwriting sort of the continued maturity of this asset class as they look to hold Bitcoin long term.
So you didn't particularly see massive outflows from Bitcoin or any other token currency?
No, not really. I think there's been a little bit of a more consolidation around Bitcoin. And so I think in the crypto world, you can maybe call that a little bit more of a flight to quality just in the sort of the back half of the year. But generally speaking, I think investors are still very bullish on crypto long term. And I think you will continue to see that crypto is a bigger part of what you might call sort of the modern portfolio.
How are you thinking about the bond market and rate cut expectations for 2026? And how consequential is this for the tech sector?
Yeah, that's a good question. I mean, I don't think we got as many rate cuts as most people expected. And so I think it is really curious to see how the bond market will play out in 2026. Also, when you're talking about sort of fundamentals among the S&P 7, the S&P 10, sort of the Max 710, that are still a little bit on the high side. I think some people are still expecting that there is way more rate cut to come. I mean, you see it in some of the commentary that's obviously coming out of the White House and people around there. So I think most people have priced in more rate cuts going forward. And as we've seen historically, that should sort of inflate more risk on assets. So crypto, again, I think will be a beneficiary of that. But also these longer term tech companies who have cash flows that might be, even though they have great earnings potential, great earnings performance right now, I think many of them are being underwritten on future kind of performance that might be even better.
Mm-hmm. And especially as we think about potential rate cuts this year and thinking about the state of the economy right now, we know that the U.S. consumer has really been strapped. We've been talking over and over again about this K-shaped economy. How are you thinking about the health of the U.S. consumer right now?
Yeah, I think it is very K-shaped. And that's why I think companies that cater a little bit more to sort of the upper part of the market tend to do a little bit better where there's not a lot of recession risk. By the way, it's funny, I think in the world of retail investing, I think you've seen that bifurcation as well, right? Since COVID, retail investing has exploded. And it's now at the point where you're seeing two things play out at the same time, which is quite interesting. On the one hand, people are embracing these more casual, speculative assets that are more sort of akin to betting. But at the same time, retail are becoming very sophisticated, and they just had one of their best years ever. And I think a lot of that has to do with them being hardened by sort of market moves of the past. I mean, April for us was a month where We saw retail being very, very quick to buy the dip. For reference, public caters a little bit more to sort of the sophisticated, serious type of investor. And they're becoming more AI literate. They're using AI tools to research stocks better, faster, with more quality. And I think you'll continue to see that being a big, big trend going into 2026.
Yeah, like there are so many platforms that you can trade on now. And I know you say you cater to the more sophisticated investor, but what would your ambitions be for public.com for the next, 1 to 3 years?
I think it became clear in 2025 that the next big platform shift, the world of investing, is the shift to agentic AI. I mean, arguably, it's the biggest shift to happen since investing going mobile. And I think it's going to play out in a couple of different ways. The first and most obvious use case was research. We sort of pioneered that in 2023, being the first to embed AI research directly into the investing experience, which gives you a bunch of benefits. They can sort of proactively read your portfolio and tell you what you should care about. The big thing that happened last year in November is we launched a product called Generated Assets that is essentially goes into the creation of new assets. And so think about this as a tool where you can prompt your own index, essentially. So you could go like, hey, give me companies that do well if inflation stays higher than 3%, or give me CEOs who are very active on social media, or even kind of combining existing indices, like give me the top quartile of the NASDAQ and the S&P 500, but take out companies that might be affected by tariffs, et cetera. And I think the effect of that we've seen just in these last couple of months is that people now have their own bespoke indices. They don't have to just be stuck with buying an ETF. When you think about it, a lot of people are buying the same financial products, even though they actually have different investment goals or risk tolerances. And though that's a big, big theme going into 2026, that I think you'll see people being able to have their own bespoke financial products that is sort of fitting their unique investing vision of the world.